What if I told you that you don't need thousands of dollars to start investing? You can begin with just $100. And no, you don't need to be a finance expert either. In this video, I'll show you exactly how beginners in the United States can start investing safely, step by step. Let's get started. Step 1, set the foundation. Before investing your $100, make sure you have two things. First, a small emergency buffer. Even $500 saved helps. Second, no high-interest credit card debt. If you're paying 20% interest, paying that off is a guaranteed return. Once that's handled, you're ready to invest. Step 2, choose the right account. In the US, you have 3 beginner-friendly options. A regular brokerage account, a Roth IRA, a 401k if your employer offers one. If your job offers a 401k match, take it. That's free money. For most beginners with $100, a Roth IRA is powerful. You invest after-tax money, and your growth is tax-free. It's regulated by the Internal Revenue Service, and it's one of the best long-term wealth tools available. You can open accounts with platforms like Fidelity Investments, Schwab, or Vanguard Group. Many have no minimum investment. Step 3, what to invest in. Now you have $100 sitting in your account. What do you buy? Instead of picking random stocks, consider an index fund or ETF that tracks the overall market, like one that follows the S&P 500. Why? Because you're instantly investing in 500 of the largest U.S. companies. That means diversification, lower risk, and historically strong long-term returns. Many brokerages allow fractional shares, so even with $100, you can start immediately. Step 4, automate and stay consistent. Here's the secret. $100 won't make you rich overnight, but consistency will. If you invest $100 per month with an average 8% annual return over 30 years, that could grow to over $140,000 thanks to compound growth. The key is automation. Set up recurring investments. Don't try to time the market. Even experts struggle with that. The U.S. market moves based on many factors, including interest rate decisions by the Federal Reserve, but long-term investors focus on time in the market, not timing the market. Step 5, avoid common beginner mistakes. Don't panic sell when the market drops. Don't chase hot stocks from social media. Don't invest money you'll need next month. Investing is a long-term game. Starting with $100 isn't about the amount, it's about building the habit. The earlier you start, the more powerful compounding becomes. If this helped you, comment invest below and let me know your biggest investing question. And subscribe for more simple step-by-step finance videos for beginners in America. Your future self will thank you.